Several Florida taxpayers are suing Governor Ron DeSantis for eliminating Disney's special district. The lawsuit says that people who live near Disney World will be burdened with at least $1 billion in bond debt from Disney should the district be dissolved. Now, the state approved a measure in April, stripping Disney of its self-governance after the company slammed Florida for passing the so-called Don't Say Gay law. The U.S. Department of Education has forgiven nearly $7 million in student loan debt. The sweeping move applies to more than 113,000 public service workers at nonprofits or with the government after 10 years. Now, the relief averages about $60,000 per borrower. The Federal Reserve increased interest rates by 0.5 percentage point in an attempt to battle high inflation. It is the biggest hike in over 20 years. Domestic and international markets jumped in response, and later today, the Bank of England is expected to announce its own interest rate hike. So for more on this, we want to bring in Ajay Rajadhyaksha, Global Chairman of Research at Barclays. Thanks for joining us, Ajay. So, as soon as we heard this is the question everyone has. How is this going to affect me, and when is it going to start affecting me? So where and when will people start to notice the impact of this rate hike?
It takes a while usually because rate hikes filter through the economy with a 6-9 month lag, except in housing, where mortgage rates have gone up in anticipation of these upcoming rate hikes, and there you're going to start to see economic activity slow down pretty quickly. It started, and I think we bottom out by this summer. For the rest of the economy, I think you still have to wait for closer towards the end of this year.
Yeah, for housing, you got the added pressure of not having enough housing stock out there, so it's going to be definitely tough for people who are trying to buy a house. But this must benefit some people as well. So who benefits from the increase?
Sorry, could you repeat that?
Yeah, sure. Who benefits from the increase?
So, well, obviously savers benefit from the increase, but quite honestly, in rate hikes, no one actually benefits, right? What the US Central Bank is trying to do is to slow down the economy. It feels like the job markets are too tight. It feels like financial markets are too frothy. That phrase, take away the punch bowl, exists for a reason, and no one feels good when the punch bowl is taken away.
So keeping that in mind, though, stocks sort of soared yesterday. So clearly, there's some group of investors that felt pretty good about the rate hike.
So I think stocks soared because investors expected even worse. Remember, the one thing that was significant about yesterday is that Powell seemed to take off 75 bip hikes at a clip from the table. That's the reason why stocks soared, but this is noise. Last week, remember, we had 3 similar moves daily. 2 were down moves, 1 was an up move. Yesterday was an up move. There's just a lot more noise in the market. It's at a higher amplitude because the Fed is in play. I wouldn't read too much into what happened yesterday. I really wouldn't.
So the overall plan for the Fed, right? The Federal Reserve plans to shrink its nearly $9 trillion balance sheet by $3 trillion over the next 3 years. What does that mean for someone like me, just a regular person? What sort of impact can we expect from that?
So the Federal Reserve has played down the impact of the balance sheet shrinkage, and I think for good reasons. Remember, Yellen, when she was Fed chair and they did a previous round of shrinkage, the phrase used was, "This is like watching paint dry." Now, this Federal Reserve seems to think that it's worth about 2.5 hikes. But again, it won't mean a whole lot in 2022. Look, I think 2 things will happen in 2022. The US Central Bank will tighten policy aggressively, shrink balance sheet. Inflation will peak at the March print, which came out in April, and will start to head lower. Will still be way below about 2%. And the 2 will have very little to do with each other, at least for 22.
All right, Ajay, thank you so much.
Thank you.